Japan's Nikkei 225 slid over 1% in volatile trading as escalating tensions in the Middle East prompted a broad risk-off reaction across global markets. Investors moved towards safe haven assets such as the yen, gold and government bonds, while equities, particularly export-oriented sectors, came under heavy pressure. The Topix index also fell, with steep declines in automotive, electronics, machinery and other export-linked stocks as fears grew that prolonged instability could disrupt supply chains and damp global demand. Energy prices jumped on concerns about supply disruptions through key maritime routes, intensifying worries for energy importing economies like Japan and South Korea. Higher crude and LNG costs threatened to raise input and fuel expenses for manufacturers, airlines and shipping firms, potentially squeezing corporate margins and widening trade deficits. Airlines, shipping companies and transport-dependent businesses were among the hardest hit, while some energy and defense-related names recorded modest gains. Currency moves amplified market strains. The yen strengthened versus the dollar as investors sought safety, offering some relief for import costs but pressuring exporters by reducing the value of foreign earnings when converted home, adding downward pressure on major export-heavy listings. South Korea's KOSPI similarly fell amid heavy foreign selling, with semiconductor and other technology stocks suffering as overseas investors rebalanced away from export-reliant markets. Global indices mirrored the cautious tone, with Asian and European markets declining and US futures pointing lower as traders weighed the potential for a prolonged conflict.